Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the independent speculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Thanks, Jim. Glad to be back on the air.
Tariff mania. The G7 finance ministers and their advisors met up in Whistler, and it was the G6 versus the USA. And so far, no movement from the U.S. away from imposing tariffs from all of its best friends. How long does the U.S. expect to remain best friends with people when you put punishing penalties on them?
That's an interesting question, Jim, and I'm not sure it's one I'm the best one to answer. I'm not here wearing my political analysis hat. I'm more interested in the impact on things that I might invest in. So whatever happens with the friendships and the consequences down the road, I'm not saying it's not important, but the more immediate concern is, what does this do to my investments? What do the tariffs mean for prices? And, I have to say it's just really striking how this all rolled out. Like, when we talk about this, the pro-Trump people always say, and I will say this, they always say, it's all a negotiating tactic. He's playing tough because the Chinese don't play fair and so on, and he's got to be tough to get a good deal. Fair enough. Okay. If that's what it is. So he announced the initial round of tariffs, and then he exempted the friends, but now the friends are getting on the tariffs again. And I'm having a hard time seeing this as a tactic. It looks more like he really thinks the tariffs are a good idea. And 200 years of economic history would argue otherwise. So I am concerned about that. And I think there will be an impact. It will, generally speaking, make things more expensive, a lot of things more expensive, especially if you put tariffs on raw materials like steel and aluminum. That said, the U.S. doesn't import a lot of steel and aluminum. It's kind of small. It's funny to see them focusing on the raw materials instead of the finished goods. Because that has so much blowback for the U.S. people who use those raw goods. This gets very complicated. We could spend a whole show talking about mercantilism, neo-mercantilism, and the economics of tariffs and things. But I think the one thing that I would say right now is that these things take a while to play out. We don't know what the end game is. It may still be negotiating tactics, and we may end up with a better deal at the end of the day. I certainly hope so. But if the tariffs stay on, and if the retaliation stays on, a lot of things are going to get more expensive, and that's bearish for the economy. It could derail the economic growth that we've enjoyed recently, and that has consequences for a lot of investments, particularly the commodities.
Well, 70% of the U.S. aluminum comes from Canada. So for Canada, it's pretty important that this thing gets solved. Yes,
for Canada it is. And that's no disrespect to the Canadians. I was thinking with my U.S. hat on there.
And most companies, by the way, that produce these products, they're American-based companies. But the product happens to come out of Canada. But, it's not owned by Canadians. It's owned by Americans.
Yeah, I get that. The short-sightedness is striking. And even if it was, evil Canadians exporting, unfairly cheap aluminum to the United States, well, it makes our beer cans cheaper and everything else, airplanes and all kinds of things that use aluminum cheaper, and that's better for all those consumers. So, robbing Peter to pay Paul is just not good economics.
The whole fact, isn't it, of globalism is you're trying to produce goods where they are produced naturally for their cheapest amount.
Sure. It's division of labor. basic economics.
Also, do you feel that American officials aren't basing their decisions on facts but on feelings?
Well, that's, Trump himself says that, he goes on his gut and that he's always right and he's a great deal maker. And I certainly hope so. Right now, I have to say it, the tummy rumblings are not impressing me. And I know that there are listeners out there who are Trump fans, and I say, I'm not here to bash Trump. I'm just talking economics, and let's see what the consequences are. But right now, the actions taken by the U.S. administration have implications, whether you're pro or against Trump, they have implications that you have to pay attention to.
Well, and the first people who feel the pain in retaliation are the American pork producers. When they imposed sanctions on Russia, I think, was the biggest foreign customer of U.S. pork, and they canceled all the orders. And now Mexico has already said they're not going to buy American pork. I think you're going to find yourselves having bacon on everything, like ice cream.
That's an interesting and potentially poetic retaliation. Pork having its political sense to that word too. But the Chinese, they did that sorghum thing, and they're saying that if the tariffs stay on, that all whatever progress there was in the negotiations, it all gets swept away. The bottom line is that if these tariffs stay on, they're a big break on the global economy, which is still recovering from a major shock, and this is very dangerous.
Do you think the president would like to be known as the guy who caused the next worldwide recession? Obviously not,
but he thinks he's doing the right thing, and we'll have to see what happens. I think history is not on his side, and I think we're going to find out soon. But again, maybe it is negotiating tactics, and maybe he will do another 180. He's done quite a few of those, and we'll end up with a better deal. We'll have to see.
Do you think that North Korea and the U.S. will be meeting up on the 12th, or is that still up in the air?
That's a total crapshoot. Just because they say it is, it doesn't mean it will. I mean, right now it's on. It was on before, it was off, now it's on again. I'll believe it when I see it.
The travel agents must be going nuts.
Well, yeah, maybe not. Maybe they're like brokers. They get paid by the trade, so if they buy the tickets, sell the tickets, buy the tickets, maybe the brokers and the travel agents get paid more per transaction.
Is there a way to start working on what people should be doing with their money when you have so much indecision and waffling going on?
Absolutely. I'm really glad you asked that question, because to the degree that it makes things uncertain and it makes investment, proper, normal, Graham-Dodd style securities analysis-based investment difficult, it renders us all speculators. So I think that's the first and foremost thing, is to realize that in today's topsy-turvy world, we're all speculators. And if you don't realize that, you're in danger. And if you do realize that, then you modify your plans accordingly. But there's another very practical thing, which of course is, the mantra that my mentor Doug Casey taught me, and that is that we buy gold for prudence. It's not a speculation. We don't buy gold because we're thinking the gold price will go up, and that's a speculation on gold. That's what we use gold stocks for, because of the leverage. We speculate on gold stocks, but we buy gold because it's gold. And at the end of the day, no matter what happens, somebody will accept that gold in payment at some rate or another. It's the only financial asset that is not simultaneously somebody else's liability. It's the thing you can go long for which there is no short. It's the form of wealth preservation that has lasted over thousands of years, and at some clearing price, it will function under any foreseeable circumstance. So when the world is going crazy, I think it's crazy not to be protecting yourself with safe haven assets like the precious metals.
We'll have more with Lobo Tiggre next on this show.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, do you think that gold will eventually start moving up, or again, should you be acquiring it while it seems to be relatively affordable?
Yes and yes. I have no doubt that gold will go up. All the money printing that's happened around the world since the crash of 2008 has been muted in its impact on inflation. But that can't last forever. It won't last forever. I'm extremely bullish on gold in the mid to long or even the short term. That having been said, bargains are great. I have been shopping while prices have been down, and I'm very glad, actually, personally, for me, it works out great that gold prices are off at a time that I'm launching my new business in which I write about things that I'm investing in, because that means I'm able to buy stocks at lower prices than I would have been able to before. And I'm a buyer right now. I'm shopping. I've got a list, and I'm out there shopping, waiting for the market to come to me on several stocks I'm interested in. So it's great for me personally that it's off at this time, and I'm not at all concerned about where it's going later. So it works for me. For anybody who's excuse me, already long, obviously it's painful, but if you're not all in, it's still a buying opportunity. And I'll say one more very interesting thing to me, and I hope to your listeners, about gold breaking below the psychologically important 1300 level. And that's this. Before that happened, a lot of commentators were bemoaning the fact that the equities were lagging behind gold. Gold was actually having a pretty good year, and the stocks weren't. You know, what was up with this? Why wasn't Mr. Market rewarding the stocks as, you know, would be proportionate to the underlying commodity? And so there was like this drag effect, and maybe it was people were afraid, maybe people thought the break below 1300 was coming, and so they weren't going to buy. Whatever the reason was, just keep this in mind. You know, when gold was on its roughly upward path earlier in the year, people were bemoaning the stocks not following gold enough. Well, then gold breaks down, breaks below the psychologically important 1300 level. I mean, really, to a producer, it doesn't matter very much if gold costs $12.97 or $13.02. They're still going to make roughly the same amount of money per ounce of gold produced. But that psychologically important level was pierced. And what happened? There was actually a lot of buying. And a lot of the equities that you might think would experience a waterfall event over such a psychologically important level being breached, they didn't sell off at all. Some of them actually went up the day that gold went below 1300. I know because I was watching for that. I was working on my shopping list as I was discussing before, and I saw that gold sell off, break below 1300. I said, this is great. I'm going to get my bids filled. I'm going to get stink bids filled on my favorite picks. But no, the quality plays, some of them actually went up that day. Like, people saw that as a liquidity on the buy side event and bought in. So this is very interesting. The stocks were not performing as gold was rising earlier in the year, disappointing people. But now that gold has shown some weakness, and you'd think that that would really scare people out, the stocks are still not following gold down as much as you would have thought. They're resisting the downward pressure the way they resisted the upward pressure earlier in the year. What this tells me is that, you know, gold may be more or less at the right place right now for current market conditions, and that the people watching the sector are there, and there are other people like me that have money on the sidelines waiting to deploy, and that weakness right now is being soaked up. So to me, this is this is good news. It shows something of a floor. It shows a lot of upside potential in the next move coming ahead.
We'll have more with Lobo Tiggre right after this.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, we've seen record buybacks in stocks on the S&P over the last 2 months. Has that acted like an unofficial form of quantitative easing?
Oh, I'm not going to answer that one, Jim. I'm not a quantitative easing kind of economist. I'm not an economist at all. I will say, though, that as a general rule, I'm not very impressed with buybacks. If you have money, surely there's something you can do to build a better mousetrap, to improve efficiencies in your production line, or deploy the capital for interest somewhere. There's got to be something you can do that adds value for shareholders better than buying back the stock. I'm not a big fan of that. I understand when you think you're undervalued and the shareholders are screaming because the stock price is going down, but I just don't think it's a very useful deployment of capital, so I'm not a fan.
What should they have been doing with all this excess cash?
Build a better mousetrap. I mean, what are you in business for? If you're in business and you've got cash on the books, find a way to do it better, improve, grow, go forward. Buy new machinery, buy new software, hire new kids who are bright right out of the box, full of new ideas. There's got to be a million things you can do that'd be better than just the very short-term vision of propping up your share price.
Well, isn't that because so many executive salaries are based on their share price?
Well, that's a systemic question there, Jim. How should executives be compensated? All that stuff is another very long conversation we could have. But at the end of the day, the owners are the shareholders. And if they don't like it, and if they think the system is broken, they have the power to change it if they want to. So if the shareholders aren't doing that, then it's on them.
Well, we've seen some general annual meetings where the shareholders have showed up, but because the executives have owned so much of the stock, those unhappy shareholders have no say.
It's an interesting point. Sometimes, I guess rarely is it on the bigger companies that the executives own so much, but there are insiders, big banks or so on, who are backing the current horse, and the little guy doesn't have much say. Fortunately, in my neck of the woods, in the resource sector, primarily where I invest, or in smaller ventures that I'm interested in, it's much more fluid. And, unless you're Elon Musk owning large chunks of the company, that's pretty rare. Usually it's possible for dissidents, if they want to mount a charge, and sometimes quite successfully.
So, speaking of Elon Musk, do you think that the Tesla car is going to survive? Because apparently for every Model 3 he sells, he loses about $15,000.
So they say the materials teardown, looking at the $28,000, I think, was the cost of materials there. But that number could be wrong. That's not Tesla's number. I don't know, Jim. I don't want to handicap that. But I will say that lots of people over many years have said Tesla's going down or Musk is going down, and he never seems to happen. He seems to find a way to pull a rabbit out of the hat. It's just one of those people that it's very risky to go short on them against him.
Well, I've never met a person who owns a Tesla who didn't love the car. Yeah.
There's a lot to be said. Personally, I'd love to get the new Roadster when that comes out. I sold my Corvette when I moved to Puerto Rico and been thinking about what to do instead. And, it would be really nice to have something zippy again.
Yes, people have this feeling that electric vehicles are like the old milk carts that used to come around, or if they're like a golf cart. The Tesla, the full out model is like the second or third fastest car on the planet that a person can buy.
Yeah, well, the new Roadster that he's, described the specs on, of course, it doesn't exist yet, but as described, it will be the fastest production car in the world, bar none.
Well, that means there's going to be a lot of 19-year-old kids in Vancouver with new driver stickers on electric cars. It's always encouraging to see a bright green Lamborghini with rookie driver stickers on it.
When I bought that Corvette a couple of years ago, the dealer did warn me. He told me that most accidents involving Corvettes are in the first year when the new owner it's their first sports car. Fortunately, I never wrecked mine.
Well, the acceleration, I think cars can get away from you. It's simply that. You're just not used to the power. And I know this really shouldn't be part of our conversation, but in Vancouver, we do have a problem with kids with luxury cars, doing 240 clicks in 60-kilometer zones.
Yeah, well, there's what can we say? It's a small part of the larger picture, and I guess the important thing, to bring it back to the subject of our show, is that the landslide of consumer sentiment shifting in this direction is enormous. I just watched on Yahoo Finance this morning that 28% of millennials now say that they would prefer, they'd buy an electric car even though it's more expensive. That was 28% of young males, by the way. Young females were only 18%. But that's really striking. The young men are willing to pay more for an electric car. And the number of auto companies that are switching over, at first it was Volvo said they would go all electric by 2019. But now bigger and bigger companies are producing massive new lineups. I think it was Fiat Chrysler just announced some, like a couple dozen new all-electric models or hybrid models. And so a lot of people that are projecting the prices of the new energy minerals and the commodities that go into the batteries in this technology are sort of assuming, they all have projections for the rate of adoption of electric vehicles, and they start the curves based on where we are now. But it seems to me that this is not going to be a smooth curve. It's certainly not a linear function. This is a zeitgeist type change, a paradigm shift. It's not just a better mousetrap. It's a complete change of the way we do things. And I think we could see shockingly fast adoption. I can't prove that, and I'm not saying it necessarily has to happen. I'm saying it could happen much, much faster than anybody's anticipating. And that'll blow the prices of the underlying commodities that make that technology happen out of the water. And the stocks and the companies that have those, are exploring for those, producing those, developing those mines, they will go stratospheric.
Well, in Vancouver, we're paying the highest gasoline prices in North America right now. $1.52 a liter, about $6.80 a gallon. It's not hard to convince people that you might want to use something where the source of energy is cheaper.
Indeed. I guess I have the opposite situation here in Puerto Rico. I have the second highest electricity cost in the United States, so it might actually be cheaper to stick with a gas car here. But, I like the idea of having that autonomy, being able to charge at home and never have to go to a gas station, not have to worry about changing the oil and all the other things that go with the internal combustion engine. And yes, evil mining person that I am, I actually do care for the planet. I actually like to go on a hike in the mountains and see them green and not covered with trash and not polluted. And I wouldn't mind having an electric vehicle that didn't contribute as much to pollution in the world. I don't like breathing smog any more than anybody else.
How's this going to reconcile with all the people who love their SUVs? Right now, you can't. American car sales have totally tanked. People want something that's four-wheel drive and kind of big and mean.
Well, they want what they want. What I'm saying is partly that those wants are changing. I think the manufacturers are adapting to that. Like I said recently, Fiat, Chrysler, and whatever else is under that umbrella, they're announcing a lineup of not just one or two electric cars, but a couple dozen different electric cars. And that's going to include electric versions of some of those big, bad, beefy cars you're talking about. And the other auto manufacturers are doing the same. I don't think that's going to be a choice people are going to have to make as a sacrifice for long. I think they're going to get the electric version of the car they want pretty soon. I just saw a YouTube video of a prototype of a four-wheel drive sports car. It's not an SUV, but it's got 4 electric motors, one for each wheel, which have independent suspension. So it drives like a race car. It's got 1 megawatt of power, which is the equivalent of over 1,300 horsepower. Right? My Corvette had 350 horsepower. This thing has 1,000 more horsepower. And it can go off-road. It can go on dirt roads. I think that would be great for Puerto Rico, given how many potholes we have here. It would be safer to drive. And it out-accelerates the Tesla. It goes 0 to 60 in 1.8 seconds instead of 1.9 or whatever. It's just an amazing statistics. The top speed was only 155 miles an hour. I don't think there's anywhere in Puerto Rico I could go 155 miles an hour, so that's not a concern for me. And it's only a prototype, so it's not in the market yet. But what I'm saying is these products are coming. I mean, that thing is it's a beast, and fast, and it'll go off-road. So I think the products that you're saying people want, they're going to get that without having to pollute the air.
It's something I haven't heard a lot of conversation about, but there still must be development in it, and that's 3D printing. I thought they could develop a chassis in a factory and then send it to your local car dealership, and there you could design your own car around it with 3D printing. Any talk about that?
I'm not an expert in 3D printing. I'd have to question how strong a chassis made by squeezing out metal toothpaste and layers would be. If it was stronger than poured steel or aluminum or whatever you make it out of, titanium, then yeah, go for it. But if not, I'm not sure. I was
thinking that the chassis, the frame, would be made in a factory somewhere. But what you could do is have, say, 24 different templates where you could 3D print your dream car on top of it.
Sure. No, that makes sense. Body panels, those could be extruded or 3D printed, and you polish it up. You don't see the layers and so on. And that could individualize the experience a lot more. I think that's a trend that's been going on for decades now. Instead of, remember Henry Ford's famous quote about you can have the Model T in any color you want as long as it's black? The world is very much headed in the opposite direction ever since, and that's accelerating now. You go to a Mercedes-Benz dealer now, and you order the car you want, and there's a lot of customization that goes into that. And what you're talking about just adds to that. I think that's a no-brainer. I think that's coming. I'm not sure what the investment implications are for me on that, but sure, I see that happening.
And going back to the whole theme of our show, we don't know what's going to happen because there's so much indecision and change decisions. Is there one area where you think you could invest in, or do you have to super diversify in a situation like this?
I think given that, as we said at the beginning of the show, we're all speculators now, I think it's essential to diversify because you may think you have the safest thing, and then suddenly it's not, right? In a world where Lehman Brothers can go bankrupt or General Motors can go bankrupt, there is no such thing as a truly safe investment. There's nothing you can just buy and forget about and count on for retirement anymore. Nothing. So yes, diversity is an absolute must. I think in a volatile world where things are changing drastically on a daily basis, safe haven assets like precious metals are an absolute must, but not the entire thing. You don't want to put all your eggs in one basket, even if it's a golden basket. I think all of the above. But as we've just been discussing with the new energy paradigm, I think that's a great place to speculate right now. Even if the economy gets derailed, people are always going to want a better mousetrap. And in fact, even more so, if you've got a product that's cheaper and better than the old way of doing that, then that's going to be the one that's going to get bought when things get tough. In fact, it could even be the things that get tough that prompt the change. People are slow to change often, right? You know, you have something that looks really different. It's not the way that you're used to seeing things. You may be reluctant to adopt that new idea, even if it's by the numbers better. But if the new idea is cheaper and you're tightening your belt, you know, well, I'm going to embrace change at that point. So I think that the new energy paradigm is bullish for the related commodities, regardless of the global economic ups and downs.
And when you say cheaper and better, I'm seeing the impact in Vancouver of super high gasoline prices. I went to a very popular restaurant that's usually packed on a Friday night, and there were only a handful of customers. People aren't going out because they can't afford to anymore.
Wow. Well, there you have it.
Lobo, thank you so much for chatting with us.
I'm glad to be on the show again, Jim.
My guest has been Lobo Tiggre from the IndependentSpeculator.com. He was speaking to us from Puerto Rico. Don't forget to listen to This Week in Money every weekend here on HowStreet.com radio. If you have any questions for our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.